G'day traders, this is FX Big Dog and welcome to this week's market update. If you have any questions regarding this review, please email me at analysis@infinitumfx.com, or if you prefer to do a one-on-one private chat, you can go to our website and click onto the online support links. Important disclaimer: trading the forex market is risky and only intended for investors that understand and can afford the risk. Note that this video presentation is for educational purposes and not offering trade recommendations. If you choose to follow a trade represented in this video, you can do so at your own risk. We understand, of course, that all traders have a full understanding that they understand the risk and are responsible traders. Do not trade a live account unless you have traded a successful strategy on a demo account for a good period of time. Alright traders, let's go straight to the currencies, and as you can see we've got the JPY, the 240 time frame. In fact, my apologies, this is not the 240 time frame. Let me go ahead and just pop up the... There we go. Now we've got the Great British Pound, the 240 time frame. We can see the market is in a bearish down AB swing, pull back to the 382 bounds, formed double tops right there. We are in a bear flag setup, which means that the bear flag pattern should indicate that a breakout should be to the sell side, indicating we're chasing after 52.02 as the objection point. Notice that on the upside, if the market does break these highs right here at 57.40, we should be chasing after 58.64. That is not just the 618 bounce, but it is also the old lows over here, as you can see at 58.49. Now, looking at the downward swing, is holding its resistance as well, and we're finding that there's some indecision candles as well occurring on the 240. So hopefully this does break to the sell side, and if we get a break of 55.81, that should inspire the bears to take control and head towards the objection point down here. Now, looking at the euro, we've got the euro open right here. Here's a 240 time frame. It is also bearish. Market pulled back to the 382 bounce, came back and tested this low and these lows right here. Remember that support or resistance is not a defined price, but an area. So there's support being found right there that's acting as resistance, as we start seeing some indecision candle right there. This is the reason why we have not come up to the 382 bounce yet, is because support has been found right here and now acting as resistance. The market is bearish. You can see a new down AB swing is formed here at 38.38 and 35.31. That is the new down AB swing, and we're heading of course to the objection point, which is down here 33.41. Looking at let's go to the Australian dollar, the 240. We can see the Australian dollar is also bearish overall. The market's pulled back and now tested the old support level of this range. Now with the support being tested, the market is expecting to dip down south, as we are finding that the market is in a down AB swing. This is a down bearish crown swing, pulling back to the 382 bounce, retesting the 382 bounce, and this old support become resistance. Of course, the break of 87.86 should inspire the market to dip down towards the low at 85.81. and then continue to the objection point, which is all the way down here to 81.13. Okay, now that will be coming up in the next couple of weeks. Of course, we'll be waiting for the breakout to the south side first before we can start taking on those swings going down south. Let's move on to the New Zealand dollar 240 time frame. We can see it's also bearish as well, bearish down AB swing. The market pulling back to retest these lows of this range that it's just popped out of. We're testing the backside of the range. The market also came short of the 382 bounce of this large intermediate swing. Now with that being said, the market is obviously looking for down bearish swings, and we'll be looking out for those swings to head south as the market is trying to dip down towards 65.94 and then to 64.13. Of course, the low here at 68.06 is key. We take that out, then we'll of course be chasing after this objection point right here. So traders looking for resistance to trade off. Well, we've just hit off resistance of this old support right here, which was the bottom of the range. Looking at the Canadian dollar 240 time frame. Here we have the Canadian dollar. The Canadian dollar had broken out as I compressed the charts a bit. You can see it broke out of this consolidation and found support, but then came back inside consolidation, finding the top of the range. We spoke about that. We said we'll be heading to the top of the range. It did find the top of the range resistance. Market turned around, took out the low, which was key at 546, and with that low being taken out, the market's on its way down to the bottom of the range, which is at 411. Now, if 411 doesn't hold, we'll be chasing after 1212 in the next couple of days. In fact, it might be towards the end of the week, coming the next week, that we'll find that support level come into effect. So, still in consolidation. Although we're bearish overall, we're still in consolidation. We need to break below 411 to get to 412, and if 412 is taken out, then of course we're starting with the bearish down AB swings once again. Moving on to the Swiss franc. Swiss franc is showing bullish upswings. We can see we're up in an up AB boundary. Market pulling back to a 382 pounds, or just short of it. The reason for that is just short of it because look at these highs acting as resistance right there. And we're going to be holding at those highs, and if we break a little bit deeper, it might just be to pop on the 382 pounds level and then on its way back up again. If it doesn't hold at the 382 pounds, we might find support coming off this trend line and perhaps the 5.0 of this up AB fib level on the Swiss franc. Objection point is chasing after 962. Hopefully once it breaks 827 in this week still. Moving on to the JPY, the 240 JPY, we can see that the JPY is still in retracement. Remember, the market is showing up AB boundaries. Here it is, we're in an up AB boundary. It's still in retracement, in a bearish retracement. Although we've got some bullish retracement of the short-term swing right here, it's still in retracement of the intermediate swing, and it's still bearish, okay, on the intermediate swing. As long as this high at 91.27 holds, we'll continue to be bearish on the short-term swings and still in retracement of the intermediate swing. If this high gets taken out, we're heading for the extension of the intermediate swing, and we'll be crowning on the short-term swing. So very important that we break out of this high at 91.27. Do remember, traders, that if it breaks this low here and breaks these lows right here, we'll be going down south, which means that this bear flag setup right here, this bear flag pattern, will be indicating for more bearish momentum in the next couple of days. So watch out for the break of this counter trend line right here, or perhaps the high at 91.27 to indicate direction on the JPY. Okay, traders, that pretty much wraps it up for this market review. I trust that the information discussed in this session helps you become a better trader and helps you make better informed decisions in this market. This is the FX Big Dog wishing you joy, peace, and successful trading. Thank you, traders.